Good morning, everybody. This is Jeff Cooper with the Daily Market Report, coming to you about an hour before the open on Wednesday, January 30th. We're going to take a look at Apple today and see, by using a simple method, whether it looks like it's safe to take a bite out of Apple. There's only one thing you can count on in the market: that history will repeat itself. This is because human nature never changes. After every market top and bottom, we always hear it's different this time. In the 1920s, legendary trader Jesse Livermore heard it's different this time. In How to Trade Stocks, Livermore said, "The pockets change, the stocks change, but Wall Street never changes because human nature never changes." The other great trader of his era, W.D. Gann, stated the same thing. It would serve us all well to remember the truth as it applies to the tape. If history repeats itself, that's what we need to see. Then what we need to see is what stocks look like before they explode in a major advance. And contrarily, we need to see what great shorting opportunities look like. Most investors fail because they have not taken the time to study what a successful stock looks like, what the characteristics are of a stock before embarking on a major trend, either up or down. Whether we like it or not, we are all in the pattern recognition business as traders. I typically don't use indicators. In my experience, indicators are more descriptive than predictive. Price is the final arbiter. In keeping with this concept, the simplest tool of all, a simple trend line, oftentimes proves to be the most valuable. So we're going to take a look at Apple on the dailies and weeklies and see what a simple trend line told us about its top and what it seems to be telling us now. Peeling back Apple's big fall from grace, you can see that occurred after it ripped through this upper channel here in a blowout and then back below the trend line. Apple is set to backtest its 50-day moving average. We'll take a look at the dailies here, and you can see that it's coming up to this strongly declining blue moving average, which is the 50-day MA, and this is in league with an important trend line coming off the weeklies. We'll take a look at that. This trend line connects the summer lows from 2017 and the big February 2018 low. It was a break of this trend line. Excuse me. It was a break of this trend line that elicited Apple's December massacre. Now, the first time a stock does something it hasn't done in a long time, such as testing its 50-day moving average in league with an important trend line, it usually defines an important inflection point. Let's take a look at the breakdown in Apple and how the use of a simple trend line sounded the alarm before Apple's fourth quarter plunge. Notice how Apple blew out when it knifed above a one-year trend channel last summer. When it reversed back through the upper rail of the trend line, it signaled a buying climax had played out. So you see, here's this one-year channel, parallel channel. On the push up through the channel, it perpetuated a buying frenzy, and a buying climax was confirmed when it knifed back through this upper rail. The December crash played out when it immediately broke the bottom rail of that trend channel. In fact, note how the high week right here where this little green arrow is left a weekly signal reversal bar. In other words, it made a new high and closed at near the weekly lows. As we walked through in our workday WDAY video yesterday, often there are 1 to 3 iterations, 1 to 3 bars of sideways trade before a stock continues in the direction of a signal reversal bar, whether that be to the downside excuse me, or the upside. Following a signal reversal bar on the dailies or weeklies, this is often the case. The market doesn't exist to give immediate satisfaction and to accommodate. So following a 3-week sideways stint after this weekly signal reversal bar, Apple caved in below the trend channel. Here's the 3-week sideways stint, and then it caves in below the top of the upper channel. So this trend line, simple trend line, you didn't need to know anything about earnings, you didn't need to know anything about fundamentals, you didn't need to know anything about sentiment, other than that this caused a buying frenzy. Other than this break below the trend line, that was the signal to get out of Dodge. When Apple snapped through the lower rail, it crashed to its 200-week. That's this magenta line here. It's 200-week moving average. So the big question is it safe to take a bite out of Apple now? Checking the last big decline in Apple into early 2016 shows it tested its 200-week moving average 3 times over a period of 6 months before finally turning up. So this first push to well-defined resistance should reject Apple. Let's take a look at the dailies again to get a better picture of the short term. There we go. So this daily picture shows that from this 142 low, Apple is set to test this 165 strike region in league with a back test of this important weekly trend line coming up from 2017. So it's always important to look at whether you're intraday trading and scalping, whether you're a day trader, whether you're a swing trader, always important to put the pieces of multiple time frame analysis together to give you a picture of the line of least resistance. That's it for now. Good luck out there today. Speak to you next time.